Hello guys, welcome back to ICT Trading Concept. How are you all? I'm fine, thank you. So actually today's Sunday and I thought I should have picked this top-down analysis because without this analysis I can't determine where I should go this week. So this is the important thing and you all will know how to do these things, and some of you think this is the hardest thing. I mean the top down analysis, but it is the easiest one. Okay, all you have to do is you have to mark all the level, which is very important. And if you do this, then later you will see it is very easy to mark the specific level. And when you will be in a lower time frame like 5 minute, 15 minute, or 1 minute chart, you will expect some kind of reaction from this higher time frame specific area. Okay, so let's go to the video, and I hope if you do your homework, which level I am showing you over here, if you just mark them on your chart as well, you will improve. You will learn how to actually solve the puzzle of this trading market. This is the dollar index chart. You have to start your analysis from dollar index every time, every week, or every time when you will decide to take some kind of entry or analysis. You have to start it from the dollar index chart. Okay, so this is the weekly chart, and from weekly chart I can see this is the weekly I fair value gap, and this level is the consequent encroachment of the weekly I fair value gap. Okay, this is the monthly chart, monthly fair value gap. This is the consequent encroachment of the monthly fair value gap. My expectation is market will go higher, but before going further, let's just look at this run. All of this candle is weekly candle. Okay, one candle is equal to 1 week. All of them are bull candle. After so many weeks, finally we have we have gotten a bear candle last week. Okay, so I am not expecting that market will go lower. I mean, I still expect that market will go higher and it will clean this buy side liquidity. Maybe later it will trade the higher level of monthly fair value gap. This long term actually. But right now I'm thinking maybe market will give you some kind of retracement, whatever. But I am expecting market will go higher. When I'll go lower time frame, I will talk about this. How will you determine which way market will go? Right now market is inside the monthly fair value gap and to the lower portion actually, and just below the weekly I fair value gap. Let's go to the daily chart. Here is your daily chart, and if you see last day market actually went to the I fair value gap, and then using the NFP it came lower, cleared the sell side liquidity from here. I will see how it trade the consequent encroachment of this week. If you just mark the week, it will be placed at the same level of monthly fair value gap low. Okay, so my expectation is market can go lower to the consequent encroachment of this week or the monthly fair value gap low. It will trade to that level, then it will start to go higher. But how do I know market will go lower? If you see this candle low has broken with a energy, okay, not some kind of shallow run, just came below the week then started to go higher. No, not like that. If you see a very clear run through this low, then my expectation will be market will trade this daily fair value gap, because it has traded the consequent encroachment uh, before. So my expectation will be market will trade this fair value gap. If I see a very clear run through this low, still I am expecting that market will actually tap to the monthly fair value gap low. This is the same level with the consequent encroachment of this week. So it will tap over there, then it will start to go higher. That is my expectation. But we will see, because Sunday open is very important. Nobody can expect how it will open over there. Let's go to the 1 hour chart. This is the 1 hour chart, and I will tell you to keep these two level. I basically doesn't, I mean, I removed this level, but I saw Michael actually, he told in his video that this is very important, and all of you know he is the boss, he's the father of this concept. So that's why I just still keep this level, this fair value gap, this hourly fair value gap on my chart. But in my opinion, I mean, this is my opinion, okay? I'm not comparing myself with someone else, and all I know from Michael, I mean ICT. But this fair value gap, the lower fair value gap, it is very important for me. So I will see how it reacts. If it can go higher and trade this fair value gap as I fair value gap, then I will expect it will go lower and it will come back to this monthly fair value gap low. Then maybe I will see some kind of a higher run. I mean, like something like this, okay? Something like this. In the meantime, it will trade this hourly fair value gap as well, because it just tapped to the upper portion of the lowest fair value gap. So I will, it can happen, okay? I'm not telling this will happen, but this is my expectation. If I see market go through this monthly fair value gap low, also this hourly fair value gap, then my target will be this sell side liquidity. I mean here, okay? This is the sell side liquidity, that will be the sell side liquidity. And when market will came here, if I see a very big run, then I will expect it will go, I mean it will come to this daily fair value gap. Until market is above this level, this monthly fair value gap low, I am expecting higher price. So let's go to the 15-minute chart, and there is nothing, I mean it's not important over here to the 15-minute chart. You can just stop over there. I mean the hourly chart, it has actually cleared the sell side liquidity, tap to the hourly fair value gap, then started to consolidate over there, I mean in Friday. And right now price is over here. If I see market actually opened higher and it did, I mean it trade this fair value gap or this hourly fair value gap, then go through the opening gap, then this hourly fair value gap will be my first target. Then this monthly fair value gap low, this is also the consequent encroachment from the daily chart, and then this sell side liquidity. Or if I see market actually would like to go higher, then it will break this two fair value gap, okay? it it has to go through this two fair value gap if it would like to go higher. If it is able to go through this two fair value gap level, then there is a small 15-minute fair value gap. From here to 15-minute fair value gap, that will be your range until it's not broken. If price can break this 15-minute fair value gap as well, then this buy side liquidity is, it will be my target, okay? So that is DXY. I would like to go Euro USD first, because I saw some of my friends actually they trade Forex. So I thought, okay, I can just add some analysis, weekly analysis for Forex as well. That's why I just marked the Euro USD. So right now this is the weekly chart for Euro USD, and you see all of this run. This is all weekly candle, okay? This one candle is a weekly candle, and finally we got a bull candle after so many weeks. What it has done, it came to the just this level, okay? It has made the equal lows over here, and then started to go higher. You see this candle's weak, and okay, when I'll be lower time frame, then I will talk about that. But right now, sorry, if it would like to go a little bit higher, it can go. And I mean this is the weekly chart, and my expectation is it will come lower, it will come to this weekly fair value gap. You see this candle low and this candle high, this is the weekly fair value gap, and also there is the sell side liquidity below this low, there is the sell side liquidity. So my expectation is market will actually eventually come to this sell side liquidity, it will clear this sell side liquidity and trade this weekly fair value gap, and that is my expectation. Right now we are just getting some kind of retracement or something like that. In a specific level it will reverse from that level toward this weekly fair value gap. Let's go to the sorry, let's go to the daily chart. Here is your daily chart. in daily chart, you can see market is actually going higher, so there is your order block level. And some of you guys actually told me to make a video about order block, but the thing is I really don't want to talk about order block. All of you know the last up close candle before the down move with a fair value gap, that is actually the order block. And I want to just stay with this concept because Michael told that he will disclose order block in his book. I would like to wait until then. I want to respect his commitment. So I hope you guys will understand. This is some kind of inner feelings. I do not want to talk about order block. All I understand about order block, that is actually watching market again and again and again. But it is what it is. So I hope you will understand. Okay. So market actually started to go higher, and this is the daily chart from EURUSD. You can see market came lower and started to go higher. This high is the buy side liquidity. So if I see market can go through this high, this order block level will be very, very, it's a very important place where market can reverse from there. From this order block level, or if market has energy, then it can go to the consequent encroachment of this daily wick. So you guys have to mark this level to your chart, otherwise you will be inside a ocean. And I think if you would like to learn how to do this, you have to do your homework, that's all. And when I will think that market actually would like to go higher, when I will see this week will be broken, with a very good run, then I will look for this fair value gap. There is a very small fair value gap, you can see daily fair value gap. I will look for that fair value gap until this consequent encroachment is not broken. I am expecting lower price because this sell side liquidity, daily, you see this low and this low, they are relatively equal low. So this is a very clean sell side liquidity. So I'm expecting market will clean this sell side liquidity and then it will go toward this. This sell side liquidity, there is a very nice daily fair value gap as well. And lastly, the weekly fair value gap, that is actually long term. But right now I'm thinking it can go above and clear the buy side liquidity, then it can retrace from the order block, or if it has energy then it can go until this consequent encroachment of this week. Let's go to 1 hour chart. Here is your 1 hour chart, and if you go to the 1 hour chart, you see this low and this low, they are relatively equal low, almost the clean low. Just below this low there is a very nice hourly fair value gap as well. Right now market is over here. I want to see how it reacts. Okay, this high and this high, they are relatively equal high, so that is your buy side liquidity, and this is the daily order block level. So if market just came to this hourly fair value gap after Sunday, because everything is depend on Sunday. Before Sunday you can't decide your destination. Okay, so if it came to this hourly fair value gap, then if I see any kind of higher run, then this buy side liquidity will be my target, and this order block, lastly this buy side liquidity, this all level from daily chart. This order block level and this level is from daily chart. You see this high and this high, they are relatively equal high as well. This is a very clean buy side liquidity. So if market is able to go higher, this consequent encroachment will be its last place to hold the price. This is also a very nice hourly fair value gap, but if it can go through this, then I will expect some higher run. Until then I am expecting long term lower run. It can just go over there to clean the buy side liquidity first. We will see how it reacts in Sunday. This 15-minute chart, you see there is a very nice 15-minute fair value gap. So if market go through this hourly fair value gap, I will expect it will go higher, but it will take its retracement from here. This is short term. Okay, this is not long term. In long term I expect lower run. In short term it can go above, and for going above it can take some kind of retracement. Where it can take its retracement, it can take its retracement from this hourly fair value gap, or if I see this hourly fair value gap has broken, then this 15-minute fair value gap from here to here, that will be your run. you have to take this run, and when it will come here, don't just take your entry for buy, because from here to here this is your PDR, okay, premium discount or something like that, whatever you say. This is how you will read the price as well. In the meantime, until price is here, you have no trade. If you see price came to the hourly fair value gap, then it started to go higher, gave you any kind of setup in the session, you will take your buy. Your your target will be this buy side liquidity. If you see market actually went lower to this hourly fair value gap, and that is inside a session, you will take a short until it reaches to this 15-minute fair value gap. When it will reach to the 15-minute fair value gap, we will see how it work. Okay, if we see some kind of retracement, we have no trade, the buy trade, we don't have any buy trade. But if we see it break this 15-minute fair value gap inside a zone, the session, then our target will be this sell side liquidity. Then we will look for a setup. Until then, we don't have any kind of setup. Right now price is over here. I think it's clear. If it's not clear, then watch this portion again. It's very important how to read the price. I hope that will be helpful for you. So now let's go to the mini S&P first. I'm talking to speed. Speedily I'm talking. It's because the videos are gonna, it's going to be big. I don't know how to make it smaller, but when I have to talk everything, I really need some times. If you don't allow this, I don't know how to make it more shorter. Okay. So this is the weekly chart for mini S&P, and you see this is the monthly fair value gap. This fair value gap is from monthly chart, okay, and I'm here in weekly chart. If you go to the monthly chart, you can mark this level, and because this is very important. Right now price is over here. Last week it has traded this weekly volume imbalance, then it has cleared the sell side liquidity, and it went to the consequent encroachment just above the consequent encroachment of this week. It didn't trade the consequent encroachment, it was just above the consequent encroachment, okay, but this is very important level. So I'll just remove this sell side liquidity because it's destructing. So right now price is inside this monthly fair value gap, and you see this candle high and this candle low. This is a weekly fair value gap, also the consequent encroachment of the monthly fair value gap. So what it can happen, it can go above, it can trade this fair value gap, and then it started to go lower, because I would like to see that market will come to this weekly fair value gap and also the weekly volume imbalance. This is my expectation. If it has energy, then it will clear this sell side, clean sell side over here. All of them will be clean. That is my expectation. Right now market is over here, and we will see how it trade this monthly fair value gap. It can go above, it can trade this weekly fair value gap, then it can break lower. Until this low is not broken, I won't go. I'm not sure. I won't be sure that market will go toward this. Expectation is something, and market analysis is another thing. Okay, you will analyze your market through your expectation. You will mark your level from where it can take retracement toward your expectation. So market is here, and the consequent encroachment and the weekly fair value gap is right now my my destination, you can say like that way. Let's go to the daily chart. If you go to the daily chart, and here there is your daily fair value gap, and you see it just above the consequent encroachment of the monthly fair value gap. So I want to see like something like that. There is buy side liquidity and also the buy side liquidity, so market can go and it will trade this fair value gap by week, this type of week, but the body will close just below the or at the level of this consequent encroachment of monthly fair value gap. I would like to see that. Okay, if I saw that, now I can see that, then I will be sure, okay, maybe market would like to go lower. That is my thinking. How do I know market doesn't want to go lower? Instead of that, market would like to go higher. If I see a very big run through this daily fair value gap, you see this kind of run, okay, not this type of run, this kind of run through this daily fair value gap, then I will target this, this relatively equal high. You see this high, they are relatively equal high, also this high, and also this water block level. All of this level I will look for them later, but until the market is isn't able to break this daily fair value gap, I am expecting market will go lower. And you have to understand what is high, I mean long term, you mean your expectation and short term expectation. In long term, I want to see market will go lower, but in short term, I want to see that market will go to this fair value gap. It will clean this buy side liquidity, and this is also the equal high. It will clean all of this buy side liquidity, and it will go to this daily fair value gap. Then I will get some kind of retracement. This is the short term expectation, not long term expectation. In long term, I want to see market will go lower. When I will be sure that market would like to go lower, when I will see in daily chart it went to this daily fair value gap and then gave me some kind of I mean market structure shift to the lower portion, and this monthly fair value gap low has broken, then I will expect that market would like to go lower. Market just won't go there and there. This is not market work, okay? Not that way. You see all of this retracement going up and down, this is the way market works. You see from here my expectation is market will go here. I mean just just assume, okay, here it will come here. So what it has done, it came lower, it went higher, it came lower again, little bit consolidation, then came lower. This is the way. So when market start to come lower, this is with my higher expectation. But when I see this kind of move, this is the lower expectation that market will go there and it will trade this order block. So this is the lower expectation. You will take some kind of, I mean uh, you won't use your maximum lot size for taking buy, because this is not I mean matching with your hard time frame analysis. So this is against your analysis, so you will take some kind of I mean a small lot size entry, okay? But when you will see this kind of run, when it start to go toward your high, I mean long term expectation, you will try to use your maximum lot. So that is the thing. Right now my short term expectation is market will go higher, and my long term expectation is market will go to this weekly fair value gap. Okay, let's go to the hourly chart first. And there is the, and you see this is the consequent encroachment from the chart, and it actually didn't trade it, but it was just above the consequent encroachment. In the meantime, it has cleared this sell side liquidity, this equal lows. So by this candle, it has cleared all of this liquidity, then traded this order block and started to go higher. Right now, market is over there inside the new week opening gap. I mean last week opening gap. So I'm thinking that market will go higher, but in the meantime, you see this hourly fair value gap. What it can do, it can just come to this weekly volume imbalance as well. So it can come to this hourly fair value gap and then start to expand higher. Why it will go high? Because you see the, I mean it has just cleared this equal highs, but there is another high, so it can just go above this high and trade this hourly fair value gap. Then I will look for market, does it has, I mean it has enough energy to I mean to reach this daily fair value gap or not. Okay, right now this is more shorter analysis. Okay, this is more shorter expectation that market will go to this hourly fair value gap, and then it can just give you the I mean reverse, it can reverse from there. This is more shorter, so you have to break down your chart step by step. So this expectation comes from the hourly chart. Your long-term expectation will come from weekly chart, or I mean you understand, right? Monthly or weekly chart. Then you will make your expectation shorter. In every time frame you will expect your uh, shorter expectation. Okay, if I go to the 15-minute chart, you will see how do I mark the 15-minute chart. You see this 15-minute fair value gap, I would like to see that market will go there, then it will come lower, there is another 15-minute fair value gap and also the lower 15-minute fair value gap. So it will trade them, but before them it will just trade this, I mean this fair value gap, the very little 15-minute fair value gap. I would like to see it will trade over there and then it will come lower, or it will just come lower, it will trade this 15-minute fair value gap, then it will start to go higher toward this hourly fair value gap. I will see how it trade all of this fair value gap. This is the way I'm just giving you the example. This is the way you will make your expectation shorter with the time frame. Okay, and everything actually depends on where Sunday opening. So we will see how it opens, how the opening gap will work. And also we have the Monday. I think Monday is off day, so we don't have any trade in Monday. Let's see what happens. Okay, let's go to the NASDAQ first. It's already been 25 minutes. Oh man, I tried to so hard to make it more shorter, but it's already 25 minutes. So in Nasdaq, you will see it has actually came to the weekly fair value gap, also the monthly fair value gap high. And this is the another thing, guys. Some of you asked me why I came to Nasdaq instead of E-mini S&P. You saw that in E-mini S&P market is already below this, monthly fair value gap. It came below and it has traded all of this area, where Nasdaq is still above the monthly fair value gap. That is why actually I have so many level here which I can analyze when I will be inside the market. Okay, so just a second. Okay, just a second. Sorry, because my sister is actually calling. I need to pick up the call, but I would like to finish this video first. Then I will actually. So what I was talking about, I was here and it came to the weekly fair value gap, and this is the reaction. You see, whenever you will find some kind of uh, what can I say, the level which is very important, you will see some kind of reaction. That is why you have to mark all of them. You see this fair value gap. So right now market is over here in weekly chart. I want to see that how it works, the consequent encroachment of this weekly fair value gap work. Okay, I would like to see market will go to the consequent encroachment of this fair value gap, then it will start to break lower again, and it will trade the weekly fair value gap, also the consequent encroachment, and there is also the consequent encroachment of the monthly fair value gap. There is a volume balance as well. So all of this area I will look for. Let's go to the daily chart first. In daily chart you can see actually there is a daily fair value gap, and market actually last Friday it has traded this daily fair value gap, and that is wall. There is a very small fair value gap over there, but I want to see it keeps open, because that will work as a breakaway gap then, and that will help me to be confident that market will go lower. This is the daily fair value gap as well. If you come to the daily chart, it is the daily fair value gap. There is the relatively equal low, so market can just retrace from there. But before retracing, I would like to see it has traded this daily fair value gap clearly, then it will go lower. That is my expectation. We will see how the market actually open in Sunday. And you see that is very shallow run. It just tapped to the daily fair value gap, then break lower. The next candle it didn't even reach to the daily fair value gap. So I would like to see market will go, at least to the consequent encroachment of the daily fair value gap, or the higher part of the daily fair value gap, maybe a little bit higher from the daily fair value gap, whatever. There is also a very nice hourly fair value gap over here, so it can come. In Sunday we can see it has actually opened lower, then trade this fair value gap, then it started to go higher, and it has traded this daily fair value gap. This is short term expectation. Okay, and in long term this is the very clear liquidity from here to here. All I wanted it to be clean in Friday, but it didn't clean. So this will be your most obvious drawn liquidity when market will come through this opening gap. When market will come through this opening gap and also this hourly fair value gap, then this sell side liquidity will be more obvious place, the most obvious place for drawn liquidity. Until now we have no. I mean in long term I would like to see the lower price, but in short term I want to see how it trade this area. If it is able to take the retracement from here, I'll be happy to see that. But if I see it has broken, then there is very nice equal highs over there, and also the hourly fair value gap, then this equal highs, all of them I will target. But before them I will if it would happen, it will happen when I will see market actually go through this fair value gap, I mean this weekly fair value gap. Then I will expect, okay, market actually would like to go higher. So that's all. I don't want to go 15-minute chart, it's already 30 minutes, and I think it's easier for you guys to understand how to do the top down analysis, how you expect how a prime market in it will work in weekdays, and you have to do it in your weekend when market is closed. And that's all. So if you're new, please subscribe to my channel. I hope if you stay with me, you will be benefited. And if you love this video, give me a thumbs up, share my videos for you can say new people will know about my channel. That will be really grateful for me, I mean helpful for me. So see you guys, be safe, bye bye.